If your parents want to hand you $30,000 for a down payment, lenders will allow it. But there's a documentation process, and doing it the wrong way can delay your closing or take the money off the table entirely. My name's Anthony Ferrando. I do mortgages for a living, and I want to walk you through the gift fund rules that lenders actually enforce, because this comes up on a huge share of first-time homebuyer files, and I want you to be able to do this the right way the first time. Let's start with who can give you a gift. On a conventional loan, the gift has to come from a relative, a fiance, or a domestic partner. FHA loans have a broader definition of who can give a gift. That would be a family member, a close friend with a documented relationship, an employer, or even a charitable organization. Either way, one thing that a gift can never be is a loan in disguise. And nobody with an interest in the transaction can be the donor. So the seller or your realtor writing you a check does not work. Every gift also needs a gift letter. A gift letter is a short form that states the donor's name, their relationship to you, the amount of the gift, the property address, and one sentence that is the most important, that the money does not have to be paid back. Both of you will sign the letter, and lenders take that last sentence seriously because a disguised loan changes your entire debt picture. And then we have the paper trail. The lender needs to see this money actually move. The cleanest version is to have the donor wire their funds directly to the title company for closing. Second cleanest is to have a single transfer from the donor's account to yours with a statement or wire receipt showing where it came from. Often we'll need both of those things. And what really breaks a file is cash. If your family member hands you a physical stack of cash and then you deposit it into your bank account, there's no way for me to source that, and the lender can't use it. Same problem with money that moves through 3 accounts while it makes its way to you. We can often still document that, but it will just be more difficult, and you will become more frustrated with me as a result. So how much can be gifted? On a conventional loan for a single family home that you're going to live in, the entire down payment and closing cost can be gift funds. You don't need $1 of your own money in the deal. On investment properties, however, gifts are not allowed at all under conventional guidelines, so you'd have to come up with all of the money, basically. So a couple of useful details. First, if the gift landed in your account more than 60 days ago and it shows on 2 bank statements, at that point, it's just considered your money. So gift documentation no longer applies. Second is taxes. Gift tax is the donor's issue. It's not yours. And with the annual exclusion around $19,000 per donor, per recipient, and a lifetime exemption into the millions, most families never owe anything. 2 parents gifting to you and a spouse separately multiplies the room, but have your donor confirm specifics with their tax preparer because you don't want them having a surprise tax bill later on just because they did you a favor, right? I should also mention that a gift solves your down payment, but it does not fix the other parts of your qualification. You still need to have decent credit, stable income, and enough room in that debt to income ratio or financial blood pressure that you can actually buy the home. You know, a big gift paired with low income and bad credit buys a smaller approval than people expect because, you know, the payment still has to fit within your budget on paper. So if you've got a gift coming and you want the transfer done right the first time, schedule a discovery call and I'll walk you and the donor through the exact steps before any money moves.